Hey there, senior leader, and welcome to the Talent Sherpa podcast. This is, as you know, where senior leaders come to rethink how human capital really works. I'm your host, Jackson Lynch, and today I'm joined by the wearer of polos, my friend, co-host Scott Morris, who is better known as the founder of Propulsion AI.
Loves the echo.
You know, Scott, we've talked a lot about the need for CHROs to speak the language of business. I've been doing it for a long time. Most leaders mean finance, and that's true. But today we're going to actually tackle a harder truth, one that you've been pushing me on, and that is financial fluency may be necessary, but it's insufficient. It's the cover charge to get in the room, but what you do once you're there is what separates the operators from the administrators.
Yeah, 100% true, Jackson. And hey, before we dive into this topic, if you like this pod, take a second really quickly and subscribe. Leave us a comment. Drop a quick review onto one of whatever your preferred platform is. It's how we grow the pod and how we keep the content sharp for other senior leaders.
Look, I'd also like to give a huge shout out to our brand new sponsor, Dripify, the ultimate LinkedIn automation tool that's revolutionizing how professionals generate leads and build connections.
Yeah, I know you use Dripify. I use Dripify. Imagine effortlessly dripping high quality prospects into your pipeline while you focus on doing what you do best, which is creating value and closing deals. Dripify handles outreach, follow-ups, personalized content, all on autopilot, and all while staying super compliant and user-friendly.
Yeah, I think you can follow their link in the show notes. So
Yeah.
If you get a chance, we'd love to have you click through, and that would be great. That way they know that you found them from us, and it's a good deal for everybody. So let's dive in and talk about the state of play here, because I think every CHRO, Scott, has heard the same advice for years, usually from me. You need to speak the language of business. And to be fair, it's not wrong. That's why I keep saying it. If you can't read a P&L or model a headcount plan or understand the difference between margin and cash flow, you are going to be a functional lead. You're operating with half a map. But here's the shift we're going to talk about today. Financial fluency isn't the destination, it's the starting line. And it earns the right to be heard, not the right to lead.
Yeah, exactly. Financial literacy is going to help to create credibility, especially in the boardroom and definitely with CEOs and I think CFOs too. It opens the door, as you just said, but it doesn't necessarily give you a voice in the capital allocation discussion. And that's what's really critical. I know because we've talked about it during the show, we've talked about it off the show. You and I have both seen a lot of CHROs that think that if they can translate talent initiatives into ROI terms, then they finally get a fair shot. But I think what happens in reality is they just become permanent translators. They get stuck explaining people strategy, but in finances dialect. And great CHROs will go a step further. They don't just speak one language, they move from bilingual to polyglot. I've always wanted an excuse to use that word. They see the whole system. Strategy, operations, technology, marketing, finance. They see it as an integrated organism.
Scott, I don't even know what that word means, but I think it is more than bilingual, right?
You got it.
So think about finance this way. Finance sees value through liquidity, cash, return on invested capital. HR sees value through capacity, capability, culture, and leadership strength. Both are right, but only one of them is codified in the accounting system, or at least the way we would expect it to be. So the modern CHRO who can connect talent density to product velocity, or maybe speed of impact to market share, they are operating at a completely different altitude. They're not translating, they're reframing what value creation even means to the business.
We're seeing something really interesting too. New ISO standards, ESG investing groups. ESG is pushing human capital into the material category. More than $35 trillion in assets are now tied to workforce disclosures, pay equity, culture. That's the S in ESG. And the cool thing is those reporting requirements, they belong to the CHRO. And that's significant because while it's important for the CHRO to speak the language of finance, increasingly CHROs, I think, are going to find themselves in situations where the CFO needs to speak the language of HR.
Yeah, that's exactly right. In my last public company role, As a CHRO, I would sit down regularly with investors to drive not only the ESG agenda forward, but also executive comp. And before you hear ESG and you start thinking this is soft, like think about Wells Fargo. I think they paid $3 billion, something like that, in a penalty because they had a complete culture failure. I'm an alma mater of Boeing. They had a safety crisis recently that wiped billions in shareholder value. I could even see the beginnings of that when I worked there 30 years ago. Those are not HR issues. They are enterprise issues that are caused by ignoring human capital risk. So financial fluency helps you quantify those risks, but it's the integrated business fluency, connecting all the dots across finance and ops and strategy. That's what makes you indispensable.
You know, you picked two really good examples a second ago, Jackson. And the reason that they're such great examples is that the numbers looked really great until the house came crashing down on both of those. To make it, I don't want to overstate the point, but to make it painfully obvious to everybody, we're pointing these things out because while CHROs need to speak finance's language, they also need to be careful not to abandon the unique value that HR delivers just simply in favor of following down finance's footsteps because it's an understood set of metrics.
Yeah, that's exactly right. So let's maybe use that as a transition to call out some of the faulty assumptions that get leaders stuck. And let's I will throw a couple of them out there. I'd love to get your thoughts on it. First, if I learn GAAP, I will finally be a business peer. Is that true?
Well, I mean, first of all, to the way that we set this whole episode up, you need to understand the GAAP concepts so that you can participate in the conversation. But here's something that I think is interesting to point out. The finance metrics are rear view mirror metrics. They're telling you how the business performed. So I think what CHROs need to do is get ahead of some leading indicators. And so you're not going to be a business peer until you're contributing value. Speaking the language isn't enough.
Yeah. Let me put it differently. Finance doesn't define the rules of the game. That's a co-creation experience. Okay, here's another one. Finance partnership is the ultimate goal. If I can partner with a CFO, I've reached Valhalla. What do you think?
I think it's a bad assumption. I know you think it's a bad assumption. CHROs need to be co-equal partners with the CFO. Speaking the language of business gets you to the point where the CFO takes you seriously. But again, we've got to bring our own lens to what is going to deliver business value, whether that's interpreted as shareholder value or some other way. There's a unique aspect that we're contributing that the CFO doesn't have.
What about the assumption that boards only care about financial results, that governance is about audit and compensation?
Do you think the boards of Boeing or Wells Fargo only care about financial performance now? I think those two incidents that you brought up in the examples, I think are super relevant. I think those boards are thinking very differently today.
Yeah, they're all under pressure to treat workforce data as material information as well. And you're seeing that between one administration and the next, it kind of waves a little bit in one direction versus the other. But the SEC and investor coalitions, they continue to drive forward in enforcing human capital transparency. And then maybe the last assumption I throw there, finance and HR have to align by compromise. One must yield to the other, and that's probably the HR person. What do you think?
I mean, I think that's the way that it happens today. But I think what we're working toward is something different. It's productive friction. And to do that, the parties have to understand each other and they have to have unique points of view that are not necessarily diametrically opposed, but don't necessarily agree with one another either.
Yeah, I think you're right. Finance is about a liquidity. Yeah, at its core, it's about liquidity. HR at its core is about adaptability, and those two need to work in tandem to make sure that you have the right organizational resilience.
So we bring up revenue per employee as a metric, and that's a finance metric. I think another metric that smart CHROs should start talking about more is manager effectiveness, right? That's a leading indicator rather than a trailing indicator. The stronger my employee population sees my management population, the higher we're going to have engagement, the higher we're going to have productivity, And we know that those things ultimately result in higher revenue per employee. So I think the finance metric is important, but it's important as a trailing measure. We've got to have a leading measure to go with it. That's the productive friction. That's finance and HR working together.
So I will agree with you that we need a leading indicator. And I will also agree with you that something the manager does across the entire enterprise probably ought to be the neighborhood we're shopping in. I am going to push back on whether management capability is in fact the right measure. So like, I don't even know how to measure that. What I would recommend and push back on me on this one is it starts with clarity. There's a very easy way to understand whether there's clarity in role outcomes. And that is you use the first question on the Gallup Q12. And that has two parts to it. It is, as we've talked about, I think here at nauseum, are my boss and I aligned on what's expected of me at work? And are my up and downstream partners aligned with me on what's expected of me at work? I think that is a leading indicator that has way more outsized influence than a softer, broader, longer duration measure as management effectiveness.
Well, we could, I don't disagree with you in any way, shape, or form about outcomes. You and I are lockstep on that one. And whatever the measures are, I think it goes back. I bring everybody back to the last point that you made, that finance and HR have to align by compromise. And I don't think we necessarily do. I think we can be looking at a certain set of measures, and finance can look at a certain set of measures, and that creates that that productive friction. The moment the CHRO stops seeing finance as the gatekeeper and starts seeing the CFO as a counterweight, the dynamic shifts. We stop seeking approval and we start moving toward co-leadership. And I think that's the point jointly that you and I agree to.
Yeah, exactly. And I was talking about 2.5 weeks ago now, and with a CHRO that I'm working with, and he said, "Look, you can't out CFO the CFO. They're trained to be the CFO, but what you can do is out operate them by connecting what they measure to what actually makes it happen. And because we're uniquely positioned to look forward, and they are instinctively and by gap required to look backwards. And even when they talk about forward-looking statements, you have to say, don't listen to any of them, which honestly means pay really close attention. Like, we have a unique role for that counterweight. I haven't heard that kind of framed the way you just did, but I'm going to steal it. The first 3 times will be yours. After that, I will take it.
Okay.
So let's talk a little bit now about how do we move from financial fluency into that more integrated business leadership. And you and I talked about this leading into the pod today about maybe a 4-front campaign. And the first one we talked about was that CFO partnership that we earn by modeling ROI and quantifying risk. Like, could you tell me a little bit about how you think about what that partnership should look like to get financial credibility?
Well, I mean, I think you get the credibility by having not maybe an equal, to your point about you can't out CFO the CFO, but at least a working understanding of the levers that operate the business, the financial levers in the case of the CFO. And so understanding the rigor that the CFO needs to apply to the financial statements, but bringing a context that they don't have: culture risk, attrition cost, which according to the Society for Human Resource Management can be as much as 200% of a person's salary. The leadership pipeline health, right? All of those things are perspectives that the CFO is not necessarily going to have. Bringing those perspectives together forms maybe the base of the pyramid for that partnership.
Yeah, I totally agree with you on it, Scott. Just because you're using their language, which is necessary, does not mean that you need to use their lens. And we fall into that trap a lot. The second one we talked about was the C-suite alliances. And this was a little Machiavellian, as if that's a bad thing. But they're like, you do need to play the Game of Thrones a little bit on there, and talk a little bit about how to build C-suite alliances and the impact on business fluency.
Well, but you know what? You reference the book all the time, and I am a quarter of the way into it. Survival of the Savvy, right? I don't think it's Machiavellian at all to want to understand throughput and productivity in terms that the COO is going to hear, or capability constraints that are going to define strategy in the way that a chief strategy officer is going to understand, right? There's plenty of area that I think CHROs can grow into that will help them to form strategic alliances with their peers rather than just bringing in, here's the engagement survey and here's how happy your people are. I think we've got to dive into what's driving their agendas. And the better we understand that, the better the partnership.
Yeah, I think that's true. And the third one we talked about was board engagement and governance authority. I played a lot of my time at public companies. Let me maybe share with the audience what we were talking about there. The directors on the boards need to understand how to think about human capital. And it is not only with regard to the compensation, although that's historically what they've been judged on and many times voted on if they're a member of the Human Capital and Compensation Committee. They need to think about it in terms of a risk profile, and they need to think about it in terms of adopting, much more standardized workforce reporting, kind of how they can frame the talent strategy as part of a fiduciary duty. It's just not something that gets delegated on. And I'll give you a real life example. Every year we would have our information security folks come in and we would run a crisis simulation with the board of directors on some sort of breakthrough in our security defenses. And we'd spend half a day, we'd learn from it, we'd figure it out, we'd push through. So I said, that's a heck of an idea. You know what we should do? We should do the same thing for key employee succession. And we brought everybody in. And as we sat down there, we said, okay, Jimmy, you need to sit over to the side here because you just got a really great job. Congratulations, you're making a lot more money. Okay, team, what do we do? And the first thing we did is we looked on the piece of paper, and the piece of paper said that Sally was going to get the next job. And we said, is everyone comfortable that Sally's the next person? And then we looked around the room and we looked for the hesitancy. And hesitancy was everywhere.
This was with the board?
With the board, yeah. And I turned to one of the board members. Are you going to get in front of the investors to say that's the right fallback decision to make? In this case, it was with a CFO. So it had external facing obligations. Are you going to be comfortable doing that? And if the answer isn't, hell yeah, I am. And it'll be positive. If there's any sort of, well, you know what? You don't have a succession plan. You've now pressure tested it using the same tool. So thinking about how to work at a board level through an engaged governance process, it turns something that is soft that you look at once a year and probably you never use, and it turns it into something that is pressure tested and you learn from, and then you are on the hook to figure out what to do about it.
Yeah, absolutely. The last one is just that you've got to worry about external authority as well. You've got to think about market influence. And we'll put into the show notes a link to an article that I published in HR Exec magazine. And the title of the article is AI is going to take your HR job, and it's about time. For anybody who gets nervous hearing that title, it's not really about HR job loss as much as it is how AI is going to augment and support and allow the transition of your current HR team into higher value consultative and strategic activities. But I didn't necessarily write it for CHROs. I wrote it for CEOs and CFOs. And I think it goes to the point of you've got to not only think internally, you've got to think about how credible you are externally because your peers are watching that too.
Yeah, I think that's right. And as I've sat down with investors, as part of kind of making changes to our executive compensation as part of ESG discussions, they have insights into how your organization is seen from the outside as it relates to delivering the things that matter to them, which is not only free cash flow and earnings growth, but also in the reputation and impact that you're having in the community. Like most HR people, I certainly wasn't ready. The first time I sat down, the outside, I'm like grabbing my investor relations person saying, you need to be at my hip. But, 10 years later, I'm having those conversations by myself. I'm holding my own. I'm smart enough not to say anything that'll get us in too much trouble usually. But it's that four-pronged approach coming all the way back, right? Where it's the CFO partnership, it's the alliances across the C-suite. It's about how do you engage with the board, and then ultimately how do we pull in the external authority from those market influences that will help us kind of develop that integrated approach which is just beyond just being able to speak finance.
Well, and let me point out and try and amplify that forefront campaign reference that you made at the very beginning. HROs need to keep perspective. This is not about getting along. I mean, it's nice when people getting along, but the goal that we're working toward is capital allocation. It's about getting budget allocated to the programs that you know are going to deliver outsized business results to the organization. So that forefront campaign is the playbook of a full spectrum leader, thinking about what am I doing with the finance head? What am I doing with the other exec heads? What am I doing with the board? What am I doing externally? That's complete. Financial fluency gets you in the room, but cross-domain fluency gets you listened to. And that's what we're really working for, right? Sequencing matters too. First, you got to earn the financial credibility. Then you've got to build the C-suite partnerships. Then you've got to elevate your board conversations. And by the way, and I know this principally from listening to you, a lot of what you're doing with the board is informed by those executive partnerships that you have had at the highest levels of some of the biggest corporations in the country. Finally, you build external recognition. You stop at step one and you stay dependent on finances approval. You go through that whole sequence and you become an independent strategic force.
That's right. So the real question, I guess, is, are CHROs willing to stop being translators and start being authors of enterprise value? And if the answer is yes, let's talk about what we can do right away to make that happen. Here's how you can start this coming week. The first is, I think, build a shared vocabulary with finance. Sit down with your CFO, learn how they think about capital allocation, then show them how the people risks fit within their existing models. Attrition, delay, replacement, speed to impact, cost, productivity. They all have a major role of making the numbers, and the accountants are responsible for keeping track of the numbers, and the finance folks are accountable for pulling the numbers forward and explaining it in narrative form. You have a huge role in that, but only if you start with a shared vocabulary and build from there.
Yep. And I think you've got to extend that then and audit the rest of your executive alliances. You've got to look at what are the enterprise initiatives and who is responsible for those, and what are the key metrics that each of those executives is going to be evaluated by. For each of those owners, you can map talent dependencies, the things that are determining success that relate to the workforce. And then you can start scheduling a different kind of meeting. It's not an update meeting. It's a working session with them on how to advance those key metrics through workforce.
Yeah. What else would you do?
Well, I think I go back to the one that because I've listened to you so many times about elevating the board conversation, that has got to be top of mind as well. Getting human capital as a standing board topic requires you bringing in something more than engagement scores. It requires bringing in that perspective that comes from your executive alliances. So I say bring data on leadership bench strength and turnover of top talent and capability gaps, but link them to strategic goals and get them in front of the board.
Yeah, I'd push that even farther, and it's about dividing value beyond ROI. Okay. The talent Sherpa scorecard, I think, is the right step towards there. That's not a plug. That's just I think it works. Talk about talent density. The better your talent density in the roles that matter, the better your performance curve is going to be. Full stop. You talk about speed to impact in terms of how you're able to move the business forward when you have a change. You need to have a conversation about clarity of expectations. You need to have a revenue per employee discussion. If you build everything into the ROI, which is a necessary step, you want to show the ROI of your investments that you're making in people. That's great. Most people don't do that today at a level that is consistent and expected. That is not the end state to the point that you're making earlier. It is the beginning. And I think having a talent density discussion at every board meeting right after the first 3 pages that talk about here are the financial metrics and what we're doing about it, it is the next thing we need to talk about. And most companies don't actually talk about it.
Yeah. The last one I think is publish your perspective. You do it with Talent Sherpa. In fact, you do it a couple of different places. I have a new article sitting with the editorial board of Forbes right now. It's not just talking about the company, it's talking about a perspective on what's happening with the workforce. Write an article, speak at a conference, share a framework publicly. External credibility does drive some level of internal influence.
It does get scary as well because the world is nuanced and the internet is not. I learned that recently, but you still got to do it. You still absolutely have to do it. Okay, senior leaders, this is your Talent Sherpa summary. You need to be paying attention because, as Scott always says, finance is like a treadmill. You have to run fast to stay in place, but it's better when you plug it in.
I've literally never said that.
Which is
All
what
right.
makes it funny. Go ahead.
Summary time.
Hit
Here we go.
summary, Scott.
4 points. Financial fluency earns credibility, but not authority. Integrated business fluency builds independence. Redefine value creation. Go beyond gap. Sequence your influence. Establish financial credibility first, build alliances next, work on shared governance, and lead the market with your thought.
Yeah, so here's the big takeaway for me. Fluency earns access, judgment earns influence. So if we think about where we're headed, the CHRO of the future isn't a junior CFO. They are a complete and independent business leader that is fluent in how capital, capability, and culture create competitive advantage and value. They don't run their HR function. They are one of three primary business operators with the CEO and the CFO. Ram Charan talked about that. So if you haven't read Talent Wins, now's your wake-up call. You need to go read that. That is where we are headed. And the faster we're all on board with it, the faster we'll get there. And that will be a good thing for the CHROs and other senior leaders who listen to this pod. And speaking of the pod, I just want to say thank you so much for tuning into the Talent Sherpa podcast. This is where senior leaders come to rethink how human capital really works. This is so much fun to do with all of you. And I want to give a quick shout out to one of our favorite listeners. Hey, Monica from London town. What did I do a bad accent there? Thank you for being a part of the Talent Sherpa community. It was delightful to talk to you earlier this week.
Nice that the audience is international. If you liked today's episode, hit the like button. Take one quick moment and subscribe. That's how we grow the pod. Leave us a review on your favorite platform, whether that's Apple Podcasts or Spotify or YouTube if you want to see what the two of us look like. We are ubiquitous across all of those. And here's our challenge, and here's why we're asking for help. We are trying to build to 1,000 subscribers by the end of the year. We need your help to get there. We have posted really significant growth over the last couple of months, but we've got a final push toward the end of the year. It's free. It would be really helpful to us. And you never know, it may be helpful to someone else.
And if you're a CHRO wondering where to start your AI journey, but your CEO is saying, start your AI journey, don't forget to check out Propulsion AI. That's at www.getpropulsion.ai. You might wonder, what are they doing? They are building a team of AI teammates so that they can help human capital leaders focus on what matters most to the business. Isn't that, Scott, what you help people with?
Yep, 100%. We are building an AI-driven HR team that works directly with managers and frees their human counterparts to engage in more consultative and strategic activities. Hey, and don't forget that Talent Sherpa is the ultimate guide for CHROs and HR leaders who are tackling the high-stakes peaks of business leadership. From the best-selling Substack to premium deep dive sessions, it's your Sherpa up the CHRO Summit. Head over to mytalentsherpa.com or subscribe to book a coaching session with Jackson today.
And thanks, Scott. And thank you to everyone who is listening. Until next time, keep raising the bar, keep driving integrated solutions, and keep on climbing.